Now we're going to pivot into the international markets and the physical markets to kind of look at what's happening abroad and some of those different levels and what we see occurring based on U.S. exports, global exports. What is Saudi doing? Why does it matter? So here, when you look at the forecast for global oil balances, IEA is saying that by the end of the year, we're going to be short, about 2 million barrels per day, 1.7, just in terms of some of the adjustments. The EIA is saying that we're essentially going to be flat, without much. And then on an annual basis, when you look at the different shifts, you're getting an idea of kind of where we are. So there's a bit of a rounding error, and it may sound like not a rounding error, but it's a 100 million barrel a day market. So, EIA is calling for something that's 0.5, and IEA is calling for 2%. So again, it's just going to be a matter of what happens on the economic front, which is why with what the OPEC has done, it's going to create essentially a balanced market. Probably a slight build, but I'm closer to the EIA than I am anything else. And then it'll all come down to how intense is the slowdown. We've been talking about, for anyone who's been watching the Econ show, it's not going to be this devastating down 20% quarter or annual year. It's going to be down 50 basis points, 1%. We're not going to see a huge drop in global activity. So there's no real reason to get this big, gigantic drop in terms, but it's going to be that slow, like death by 1,000 paper cuts, which is going to keep that, eating into some of that crude demand, which is going to put more into the storage. So OPEC quota, right now, this is just looking at March. So what we had in April was another decline of 60,000 barrels. So again, not too much. The collapse was really driven by Iraq because of the CN problems that took about 400,000 barrels out of the market. But you can see the output quota versus actual output. You get an idea of, we're still very low, and that the difference between actual output is being driven by Nigeria. It's being driven by Angola. Like, those are the things that are driving these reductions on a broader scale, is because they just don't have the level of demand. And then Russia, it's very different when you're piping crude versus shipping it. There's, shipping has a lot of restrictions. There's more weather impacts. There's more timing impacts. There's more infrastructure limitations on coastal infrastructure. Where a pipeline's a pipeline, and they had way more pipelines than they did export capacity and storage. So that's going to create limitations. So I don't have the chart yet. I'll have it tomorrow in the FSC show. But when you look at Saudi came out and they cut pricing, OSPs, official selling prices, into Asia, but they cut them by a quarter. So the market was expecting something closer to 48 to 50 cents, and they cut it by a quarter. Now, that's still the second highest price differential it's ever been. So again, they're not doing anyone any favors when you look at that reductions, because there were some things where it's like, oh, they're seeing demand issues. 25 cents on a historical basis is peanuts. That is, and then they actually raised it for Europe. So again, there is no gift coming from Saudi, which means that we'll have to see how the rest of the region follows, but they typically follow suit, and it just means that you'll have people buying their term contracts, but they're not going to pick up extra. They're not going to request extra. They're not going to try to pick up any spots that might be there, because there is a lot of floating storage. And even as we look forward, we see that floating storage continuing to increase, which is why when you look at the Middle East side, you can see there's a marked shift higher. We're now at the highest level of storage in 2023. It's obviously still below where we were in 2017 and 2016, which obviously was the pricing war. But you're taking out 2021 levels, you're taking out 2020 levels, you're seeing that increase, and by that small reduction, you're not going to see this change. You're still going to see this remain elevated, but it's also, they're looking at this as well and saying, well, why am I producing to put it into storage? I'm just going to cut production and keep my prices elevated. And if people want my crude, they'll come and pay for it. Because if you look at the pricing of what it was prior to the announcement and then after the announcement and now a few weeks after that announcement, they're actually losing money because they're selling less, but still at a reduced price. So before they were selling more at a reduced price. So again, using it on a volumetric price basis, they didn't really change much. So the question is, do they do something again? You know, they had said they weren't going to have a June meeting, but apparently invitations have gone out for a June meeting. The next one was supposed to be July. Again, that was just based on what was when I checked yesterday on the OPEC website, but we'll see if they adjust it. Maybe that's something different, but it'll be interesting to see how they go about the next couple of months. Now, when we start looking at the 4-week average in U.S. exports, I wanted to look at this seasonally just because it gives you a little bit of a cleaner chart in terms of where we were historically. We're still at 4.2. You know, that's where I think we're living right now, 4.1, 4.2 million barrels a day on that 4-week rolling average, just because that top level is infrastructurally impossible, but we've been loading VLCCs by lightering. So again, it's a matter of when do they push off, when do they recognize that which can create these spikes. But you can see it's at a very high level and it's going to stay at that high level given what Saudi's doing. They continue to support our exports and the activity in the U.S. Now, when you start looking at crack spreads in Europe, in Asia, they've bounced a bit. This one only shows $13.22. It's up to about 14 right now. But again, it's just kind of bouncing around. But we do see that next leg to the downside. We do see this coming to $10, and that's going to result in more economic run cuts. And we continue to see, excuse me, less activity out of China, with more and more maintenance being carried out. And we haven't seen that really pivot yet, which is going to, at the same time, they're bringing in a ton of crude. So at some point that they're going to ramp up, that's going to turn into product. And which is one of the reasons why last week, and the market as well keeps saying it's really important to look at their export quotas, because those export quotas are going to dictate just how bad this gets, because we know economically there's no real support. We're starting to see that breakdown in Southeast Asia. Them coming into the market at any kind of size would just be icing on the cake, causing those run cuts. And then when you look at Dubai versus ICE, when you look at it versus Brent, you have that dollar discount. That's likely going to stay here. You could probably get pushed a little bit further to the downside just because of the OSP announcements coming from Saudi. But again, there's just that pressure point when you look at some of those activities. And then crude oil on the water. Is it below 2020? Yes. Is it one of the highest it's ever been, above the price war of 15, 16, 17? Yes. And that's where there is a significant amount because of Russia, because of that demand and now those increases in miles. And we don't see that stopping, because when you look at that crude oil in transit, last week we set a new record taking out the 2020 high. It's come down a bit, but it's important to look at how that adjusts crude and floating storage, because if you go into transit, you're not in floating storage, and as you fall out of transit, you then move into floating storage, which is why it's important to see, all right, well, there's a lot of stuff in motion, and when does it settle? So one of the things that we've been saying is we're gonna be right around the 2022 levels. Here you can see we're kind of sitting there, bouncing back and forth. That's will likely trend back to 2020, that yellow line of 2021, back down to 2022. And we're going to live there depending on when that crude goes from transit to storage, and then when it can officially be unloaded onto land storage, which is why Asian floating storage had a nice spike, came down, but there's a lot of product pointing towards China, which is why we do see this increasing, as you can see here. Chinese super tankers have taken out the 2023 highs. You know, they're tracking on that 2020 level, and it's just they're taking in a significant amount of Russian crude, because even at these levels, we're still seeing price cuts in West Africa. We're still seeing price cuts in the global physical market. And that's why it's like I see these comments from Shell and some of these others, and I'm like, well, you know, you may think that, but the trades I'm seeing don't reflect that. So whether they're seeing something in the more gray market that we're not, but China at this point, based on the run rates they're carrying and the amount of crude they're coming in, they can cut crude imports pretty significantly and still maintain an elevated refinery run rate, which again would then create another problem of, well, where does all this product go? And that's why I think it's less about now what is happening on the crude front and more about what is happening on the product side. What are gas oil crack spreads? What is distillate doing? Because that is going to be pivotal for how much activity these refiners are going to be in, because the refiner is the buyer. That is your largest buyer of crude in the world, is the refiner. Are they ramping or slowing? And that's going to be an important piece. Now, Chinese activity, again, Labor Day, typical drop. You can see it had its normal drop. It's at from a higher level. Something we think is going to continue. No real surprise there. And then as you have more of those, the holiday, you had the drop from 63 to 61.7, and then that'll continue to fall. Probably balance out at about, let's call it 60, 60 and a half, 61. And then we'll start to get that ramp up as we go into really May, this back end of the first week of May into the second week of May going forward. West Africa crude oil floating storage had a drop. Again, it's just kind of bouncing back and forth. They had cut some OSPs to try to accelerate some of these exports into the market. That's nothing changing here. We're going to continue to see that happen. U.S. crude exports and products. So gasoline had a small bump of 107,000 barrels a day, slightly above the 5-year. Distillate had a drop of 98,000, 128,000 below the 5-year. Propane, an increase of 150,000 barrels a day. That's 439,000 above the 5-year. And then total crude exports still staying at about that 4.7. Again, still seeing that strong export backdrop. As you can see here, gasoline had that bounce. One of the things that we had said is it's going to hug around the 5-year. And then as things progress, we see that trending a bit lower. And again, trending, still hugging the 5-year, but just a bit below. Now, on the diesel side, one of the things that we were saying is that it was going to fall well below the 5-year and stay in the middle of the cloud on the downside and actually start to trend towards those lower and lower figures. Now, when you look at total U.S. exports for crude, you can see, again, the elevated levels. And then when you look at propylene, still staying at that record-setting pace, and we don't see that changing just given where we are in the market. There's still a lot of LPG demand and not as much supply because of the reductions coming out of the Middle East due to those cuts. And then ethane still staying strong, staying at the high end, and we see that remaining the case. Now, on the Fujairah side, it's interesting because we had another drop in storage, which is kind of counter to what we were thinking. We were thinking we were going to start getting builds now, but based on the commentary and based on pricing, the builds are starting to get priced in. They're starting to see them. It's just, again, when do they show up is always kind of a finger in the wind, because it could take a week or two for what you're seeing in pricing translate to builds. So again, you're still seeing that trend where builds are on the horizon. The total came in at 19.69 million. That was a drop of 267,000 across the stock movement. Saw a drop in light, middle, and a slight build and heavy. Light distillate had a drop of 112,000 barrels, but the East of Suez gasoline complex continued to soften in the beginning of May as Indonesian import demand fell following the end of Eid. Demand within the region of Indonesia, Malaysia, and Vietnam has been very quiet and awaiting, again, that news of what is China going to do. And then Malaysia was actually re-exporting some gasoline cargoes. And then you also had some additional delays and cancellations on loading. So again, Indonesia has deferred term cargoes for delivery in May to June. So again, you're starting to see, again, that pressure point, which is going to result in builds in light distillate. Middle distillate dropped 450,000 barrels. The East of Suez gas oil complex was range bound on May 2nd. Participants are, again, waiting for that Chinese announcement. But then when you look at some of the numbers, you could see that there was some ships were making their way into South Korea, expected to load gas oil. And then the increase in gas oil exports came despite lower margins and unviable east to west arbitrage economics. More participants said that there were pockets of demand in Asia with Vietnam's gas oil barrels finding homes. And then as the end of the turnaround seasons are starting, that's where you're going to start to see some of these adjustments. We still see builds happening light and middle. Heavy resid rose 295,000 barrels. Spot trading activity fairly muted. And again, that continues to speak more to where we see that demand levels. The Brent spread between July and August, tightening up. As we were saying, we're getting close to kind of just flat pricing. And we think flat pricing, depending on movements, you can go into slight contango, you can slight backwardation, slight contango. There's not a real clear indication right now. One of the things is we do expect to see some strength into crude pricing. And that's, again, just going to kind of move us back towards a bit of that high level in general. So then when we start looking at flows, Norway still staying at that level. We have Nigeria coming down just a touch to about 1.28, 1.3. Angola coming in just over 1 million, probably closer to 1.5 million is where they'll settle up. 1.05. North Sea staying strong. Libya is still staying at about 1 million. So not too much variation in general. You can see Russia has announced that they will not be providing information. Again, trying to hide, I think, what we already know in terms of some of the issues that they're going to have. And that's something that we've been talking about. And then when we look at crude into Genscape, into builds, as we were saying, there was a lot of floating storage that was going to convert into land storage. That's continuing in that direction. Now, this data itself is a bit dated because we did get data for today. We'll update it in the FSC show. So when you look at gasoline's back over 1,300. When you look at gas oil, there was actually a sizable build, and I can tell you the exact number at the moment, which went to 2345 from 2236. So again, you're starting to see those builds accelerate. Like there was a build, like here, there was a draw of gas oil of 123, then there was a build of 109, still a net drop, but you're getting an idea that things are leveling off because of the lack of exports into that, the lack of exports that Europe can do going west to east. There's still a lot of volume that sits in the Atlantic Basin, which is going to be absorbed by both the Europe and PADD 1 in the U.S., but it's just the demand is going away for exports from the U.S., which is why we keep talking about PADD 3. Gasoline had a drop, but now it's right back to the highs from 2022. Storage is still going to stay elevated. We're right now at 1314, which is just below the 2020 levels, which was at about 1340. So you kind of get an idea of, we're just hugging the very top end of storage. And if prices come down, that's again, or stay down, that's going to keep that arb moving into the US. And then you look at fuel oil over in Europe, unable to export. That's going to, we had another big build of 171. So again, you're just moving back to all-time highs, which is the back and forth between 2020 and 2021. And that's something that we see continuing to be boosted. Total stockpiles in Singapore, when you look at it, again, just trending a little bit higher, staying above that 20-year average. And then when you look at the light distillates, again, staying at the 2020 highs. And that's something that we see continuing. And that's why Fujairah had some draws. But when you start looking and kind of piecing it all together, there's going to be builds there as well when you start looking at that slowdown and that uninterested in now. Everyone's kind of deferring. Now, China could surprise everyone and not increase export quotas to the same level, cut them versus last year. We don't think that's likely. But again, those are things that are potential, which could kind of change some of that narrative. Middle distillate flatlining, starting to, again, gradually see those builds. It's not going to be this massive build, but you will see that continue to trend up. And then when we start looking at residual, here you can see just staying at the high end just because there isn't the same demand for heavy Disty and resid. And then when you look at North Sea storage at flat, we will get some of those builds coming up, but that's just timing. And then, as we were saying, the pivot from European floating storage to onshore is going to continue, which is why builds will continue to rise in Europe. So that's what we have for you today. If you have any questions, again, please feel free to reach out. We'd love to hear from you, and we hope you enjoy the rest of your week. Thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.